All right, get ready to dive deep into Hitachi's 2023 annual report.
Yeah.
It's more than just numbers. This report is like a roadmap for how they're tackling some huge global trends, like digital transformation, green transformation, all while keeping their shareholders happy.
What's fascinating to me is how Hitachi is positioning themselves. They're not just keeping pace with the big tech companies, they're aiming to play in the same league.
Yeah, and their financials really tell that story, don't they? They're not just surviving, they're thriving in this new landscape.
Right.
But before we get to the exciting numbers, let's break down how Hitachi is actually structured now.
Okay, so they've got three main pillars, right? Digital Systems and Services, or DSS, Green Energy and Mobility, GEM, and Connective Industries, CI. Each of these is basically a bet on a major global trend.
Okay, so let's unpack these. DSS sounds like it's riding the wave of data centers in all this hype around generative AI.
Exactly. The demand for data centers is exploding, especially with the rise of generative AI, and that's really where Hitachi's strength in IT comes in.
But they're not just a software company. They've got a long history in hardware and industrial solutions.
And that's their secret weapon. They're combining their IT expertise with what's called operational technology, or OT, so they can offer complete end-to-end solutions for data centers. Everything from power grids to cooling systems. It's not just building the data center, it's making sure it runs smoothly, too.
So it's really this one Hitachi approach
Yeah.
where they bring all these different divisions together.
Right, and you see this strategy playing out across all three segments.
Okay, so that's DSS, tapping into that digital boom.
Yeah.
What about GM? What's their play in the green space?
Well, GEM is all about riding the wave of electrification and the global push for sustainable energy. Think renewable energy, smarter power grids, even railway systems.
So they're positioning themselves to benefit from those huge investments happening in green infrastructure worldwide.
Exactly, and they're not just dipping their toes in, they're making big moves, like their acquisition of Thales ground transportation systems business. That was a huge step in expanding their railway footprint globally.
And what's the scale of that market?
We're talking about a market estimated to be worth 9.3 trillion yen in 2024 alone.
Wow, that really puts things in perspective. Okay, last but certainly not least, there's CI. What industries are they connecting?
Think of industries that are being reshaped by digital transformation and green transformation. We're talking smart factories, high-tech labs, even buildings that are becoming more connected and efficient.
So these are sectors where the lines between the physical world, OT, and the digital world, IT, are blurring.
Exactly. And that's where Hitachi shines. They can bridge that gap, offering solutions that merge those two worlds to make industries like manufacturing and healthcare more efficient and sustainable.
So we've got these three segments, each aligned with a major global trend. But how does this actually translate into financial success? The report highlights some pretty impressive numbers, starting with revenue growth.
Yeah, they actually exceeded their initial revenue projections, hitting 9.7 trillion yen in 2023. And that growth is a direct result of aligning themselves with these global trends and successfully integrating their acquired businesses.
And it's not just about bringing in more revenue, it's about doing it efficiently, right? How does their profitability look?
Well, their adjusted EBITDA margin is up to 10.1%, compared to 9.5% the previous year. This shows they're getting more efficient in their operations. And a key part of that is the growing profitability of their Lumada business.
Okay, hold on. We need to talk more about Lumada. What is it exactly? And why is it so important to their story?
Lumada is really at the heart of Hitachi's social innovation business. It's more than just software. It's a platform that brings together their IT expertise, their OT knowledge, and even their physical products to solve really complex customer challenges.
It's like a brain that connects all of Hitachi's different capabilities and allows them to offer these really customized solutions.
Yeah, and it's working. Lumada's revenue has jumped from 1.6 trillion to 2.65 trillion yen. And here's the kicker. It's actually more profitable than their non-Lumada segments.
So it's not just a marketing gimmick, it's a real engine for growth.
Yeah.
Can you give an example of how Lumada works in the real world?
Sure, let's take data centers. Hitachi uses Lumada to optimize every aspect of a data center's operation. They're using AI to monitor energy consumption, predict maintenance needs, and even adjust cooling systems in real time. They're doing all of this by bringing together different teams from across Hitachi, a true one Hitachi example.
That's really impressive. They're basically using Lumada to make data centers more efficient, more reliable, and ultimately more sustainable.
But what about Hitachi's own sustainability as a company? Are they just jumping on the green bandwagon, or is this a core part of their business strategy? It's definitely more than just good PR. Take their GM segment, for example. They're not just building trains and power grids, they're designing them to be energy efficient and integrated with renewable energy sources. And their focus on SMRs, those smaller, more modular nuclear reactors, it shows they're really looking at long-term solutions to this energy challenge.
So they're making a real commitment to a sustainable future. But at the end of the day, businesses need to make money, right?
Yeah.
What's the bottom line here? How are they actually using their resources?
Well, this is where their focus on cash flow gets really interesting. They achieved 1.5 trillion yen in core free cash flow. And that's a lot of financial firepower. And it's a direct result of their disciplined approach to project management. They're optimizing capital expenditures and getting better at collecting cash for those big long-term projects.
So they're not just sitting on a pile of cash. They're using it strategically to invest in future growth.
Exactly. And they're not forgetting about their shareholders.
Which brings us to the big question for any investor. How is Hitachi planning to create shareholder value?
They've got a two-pronged approach: steady dividend growth and flexible share buybacks.
Okay, let's break those down. What's the story with their dividend?
Over the past decade, they've increased their dividend per share from 40 yen to a whopping 180 yen. That's a pretty clear signal that they're committed to rewarding their investors.
That's a significant jump. What about the share buybacks? How are they approaching that?
Well, they've committed to a total of 400 billion yen in share buybacks over their midterm management plan. But here's the key. They're doing it flexibly, taking into account market conditions and the progress of their own growth investments.
So it sounds like a really balanced approach, prioritizing both growth and returns.
Exactly. And to make sure everyone understands the commitment to shareholder value, they're closely tracking their total shareholder return, TSR, performance against the 2PX index.
It's like they're saying, we're not just talking the talk, we're walking the walk. So we've covered Hitachi's overall structure, their strategic alignment with major global trends, and how they're generating and using their cash. But now, let's zoom in a bit. Let's take a closer look at their three core business segments, starting with Digital Systems and Services, or DSS. This seems like the segment where they're really going head-to-head with the big tech players, especially in the world of data centers and generative AI.
Yeah, you got it. And within DSS, there are a few key business units that are really driving this growth. Their front business unit, which makes up about 36% of DSS revenue, focuses on building and operating those mission-critical IT and digital systems, the ones that really power the modern economy.
So they're not just constructing physical data centers, they're creating the software and systems that actually make them run.
Yeah, think of it as the brains behind the operation. We're talking about solutions for financial institutions, government agencies, even essential infrastructure like power grids and transportation networks.
It's another example of that one Hitachi approach, right? Combining their digital expertise with their real-world experience in these critical industries.
Absolutely. And then there's their IT services unit, which contributes another 32% of DSS revenue. They basically act as a one-stop shop for any company that needs specialized IT support.
So it's like having a fully equipped IT department on demand, without the headache of managing it yourself.
Exactly. And they're doing this through subsidiaries like Hitachi Systems and Hitachi Solutions, which have a really strong reputation, especially in the Japanese market.
Yeah, they've clearly got a foothold in that IT services market,
Yeah,
especially in Japan. But are they looking to expand globally as well?
they are. They're leveraging their digital engineering skills and cloud-based solutions to target international markets, where the demand for system modernization and digital transformation is huge.
And that's where their services and platforms unit comes into play, right?
Exactly. This unit is all about developing cutting-edge digital technologies and cloud-related services that power their Lumada platform.
Okay, I think we need to dedicate some more time to Lumada, given how important it is to their overall strategy. But first, let's get a sense of how DSS is performing overall.
Well, despite all the uncertainty in the global economy, DSS is on a solid growth trajectory. They brought in 2.6 trillion yen in revenue in 2023, with a healthy adjusted EBITDA margin of 13.5%.
That's impressive, especially considering how unpredictable global IT spending has been lately.
Yeah, it shows that they're good at identifying areas where their combined IT and OT expertise gives them an edge. And they're seeing huge potential in sectors like finance, government, telecom, energy, transportation, manufacturing, you name it.
It seems like they're really well positioned to ride that wave of digital transformation across multiple industries.
Right. And they're not just relying on organic growth. They're making strategic acquisitions. to bolster their digital capabilities and expand their global reach.
Yeah, their acquisition of Global Logic is a perfect example of that. But what I'm really curious about is how they're using generative AI. It's all over the news these days, and Hitachi seems to be betting big on it.
Now, this is where things get really interesting. Hitachi was an early adopter of generative AI, and they're investing heavily in its development and application across the entire company.
Yeah, they even set up a dedicated generative AI center in Japan to spearhead their efforts.
Right. And they're not just focusing on using it internally, they're also working with clients around the world to co-create solutions using generative AI.
Can you give me some examples of how they're actually applying generative AI?
Well, they're exploring a lot of possibilities, but one area where they see huge potential is in improving the productivity of frontline workers. Think about using AI to optimize maintenance schedules for railway systems or energy infrastructure.
That makes a lot of sense. They're taking their deep knowledge of these complex systems
Yeah.
and adding the power of AI to make them even smarter.
Exactly. And they're not doing it alone. They've teamed up with some of the biggest names in tech, NVIDIA, AWS, Google Cloud, to accelerate their AI innovation and build a robust ecosystem.
So they're serious about being a major player in the generative AI space. And their investment plans back that up. They've allocated yen 1 trillion to AI in 2024 alone. But let's not forget about their other two segments, GE and CI.
Well, GEM, which stands for Green Energy and Mobility, is all about, well, GM, which stands for Green Energy and Mobility, is all about capitalizing on this global shift towards sustainable solutions. They're focusing on three main areas: railway systems, power grids, and nuclear energy.
Let's take those one by one. Starting with the railway systems. This seems like a natural fit for Hitachi, given their long history in transportation.
Absolutely. They've been building trains and railway infrastructure for decades, but now they're expanding their global reach through strategic acquisitions, like the one we mentioned earlier, Bailey's Ground Transportation Systems.
Right, and that acquisition gives them a piece of a 9.3 trillion yen market. What exactly are they bringing to the table in terms of technology?
Well, they're a leading provider of rolling stock, signaling and control systems, even turnkey solutions for entire railway lines.
So they're involved in every aspect of railway development, from the trains themselves to the complex systems that keep them running smoothly and safely.
Exactly. And they're not just focused on the hardware. They're incorporating digital technologies like predictive maintenance and automated operations to optimize performance and reduce costs.
It sounds like they're building the railways of the future.
They are, and they're doing it with sustainability in mind. Their trains are designed for energy efficiency, and they're investing in technologies like regenerative braking to minimize their environmental impact.
Okay, so they're on track with railway systems.
Yeah.
What about power grids? How does Hitachi fit into that picture?
Well, as the world electrifies, we need more robust and intelligent power grids to handle this increasing demand for electricity.
And to integrate renewable energy sources like solar and wind power.
Exactly. Hitachi Energy, their power grid business, is a global leader in providing solutions for high-voltage power transmission, transformers, and even energy storage systems.
So they're helping build the infrastructure that will enable the transition to a cleaner energy future.
They are, and they're doing it with a focus on digitalization. Their power grids are becoming smarter, using data analytics and AI to optimize performance, predict outages, and even manage the flow of electricity from various sources.
That sounds incredibly complex.
It is, and Hitachi is well positioned to handle that complexity, thanks to their expertise in both the physical infrastructure and the digital technologies that control it.
Okay, last but not least, there's nuclear energy. It's a bit of a controversial topic these days.
Yeah.
But it seems like Hitachi is still involved in this sector.
They are, but their focus is on a new generation of nuclear technology, known as small modular reactors, or SMRs.
I've heard about those. They're supposed to be safer and more efficient than traditional nuclear plants.
That's the idea. They're smaller, more modular, and can be deployed in a wider range of locations. Hitachi is working with GE Vernova to develop and commercialize SMR technology.
So they're betting that nuclear energy will still play a role in a decarbonized future.
They are. And it's a long-term bet. SMRs are still in the early stages of development, but Hitachi sees them as a potential solution to meet growing energy demand while minimizing environmental impact.
It makes sense that they'd want to be involved in shaping the future of energy. Okay, so GM is covering a lot of ground, from trains to power grids to nuclear energy. It's clear that sustainability is a core part of this segment, but how does that translate into actual financial projections?
Well, they're projecting revenue of 3.4 trillion yen for GEM in fiscal year 2024, with an adjusted EBITDA margin of 8.6%.
Those are pretty ambitious targets. What makes them so confident in GEM's growth potential?
Well, their recent acquisitions, combined with their ongoing investments in expanding capacity and driving innovation, should help them hit those targets.
Okay, so that's GEM. Now let's move on to our final segment, Connective Industries, or CI. What's the focus here?
CI is all about developing solutions for smart factories, labs, and buildings. They see these sectors as key drivers of both digital and green transformation.
So they're targeting industries that are undergoing significant change and disruption.
Exactly. And Hitachi is well positioned to offer solutions that can help businesses navigate these changes.
What kind of solutions are we talking about specifically?
Well, in manufacturing, they're offering solutions to optimize production lines, improve quality control, and even integrate robotics and automation.
So they're helping to create the smart factories of the future.
Exactly. And they're doing it with a focus on data analytics and AI. Their solutions can collect and analyze data from across the entire factory floor, providing insights that can help improve efficiency, reduce waste, and even predict potential problems.
That's pretty impressive. What about labs? What kind of solutions are they offering in that space?
Well, Hitachi is already a leading provider of scientific instruments and laboratory equipment, but they're going beyond just the hardware. They're offering digital solutions to manage data, streamline workflows, and accelerate research and development.
So they're helping scientists and researchers work more efficiently and effectively.
They are, and they're particularly focused on areas like biotechnology and pharmaceuticals, where they see huge growth potential.
That makes sense, given the increasing demand for new drugs and therapies.
Right. And finally, there's buildings. Hitachi is offering solutions to create smarter and more sustainable buildings.
So things like energy management systems, building automation, even security systems.
Yeah, all integrated and managed through a central platform. Their goal is to create buildings that are not only comfortable and efficient, but also environmentally friendly.
It sounds like a very comprehensive approach to building management.
It is, and it's all part of Hitachi's vision to create a more connected and sustainable future.
Okay, so CI is covering a lot of ground as well. They're targeting some of the most dynamic and innovative sectors of the economy. But how are they projecting this segment to perform financially?
While they're expecting significant growth from CI, they're projecting revenue of 3.15 trillion yen for fiscal year 2024, with an adjusted EBITDA margin exceeding 10%.
That's a pretty healthy margin, especially considering the challenges facing some of these sectors, like the semiconductor industry, for example.
It is, but Hitachi is confident in their ability to navigate those challenges and capitalize on the long-term growth potential of CI.
Okay, so we've covered all three of Hitachi's core business segments, DSS, GEM, and CI. It's clear they built a really diverse and dynamic portfolio, focused on both technological innovation and social responsibility. But how are they managing all of this financially?
Well, Hitachi's financial performance tells a compelling story. They've delivered strong revenue growth, improved profitability, and generated robust cash flow. Let's break down some of the key highlights from their financials.
Sounds good. Let's start with their income statement.
All right, so their revenue has been steadily growing, reaching 9.7 trillion yen in 2023. This is driven by strong performance across all their business segments, with DSS being the largest contributor.
And how about their profitability?
Their adjusted EBITDA margin, which is a key measure of operating profitability, reached 10.1% in 2023, up from 9.5% the previous year. This shows they're becoming more efficient in managing their costs and improving the profitability of their operations.
That's impressive, especially in a challenging economic environment.
It is. Now let's move on to their balance sheet. What's striking is their strong financial position. They have a healthy amount of cash and a low level of debt.
So they're not over-leveraged, right? Which gives them flexibility to invest in growth opportunities.
Exactly. Now let's talk about their cash flow statement.
This is where things get really interesting. They've been highlighting their cash flow quite a bit in this report.
And for good reason. Hitachi achieved a cumulative 1.5 trillion yen in core free cash flow in 2023. This really demonstrates their ability to generate cash from their operations, which is crucial for funding growth investments and returning value to shareholders.
That's a pretty impressive number. What's driving this strong cash flow performance?
Several factors are contributing, including their disciplined approach to capital expenditures, improved cash collection from long-term projects, and efficient working capital management.
So they're being very strategic about how they manage their cash.
Absolutely. And this strong cash flow gives them the financial flexibility to invest in future growth areas like AI, digitalization, and manufacturing capacity expansion, while simultaneously rewarding their shareholders through dividends and buybacks.
Speaking of shareholder value, let's dive into how Hitachi plans to reward its investors.
All right, so they're focusing on two key strategies: steady dividend growth and flexible share buybacks.
Okay, let's break those down. What's the story with their dividend?
Well, their dividend per share has grown from 40 yen to an impressive 180 yen over the past decade. That's a testament to their commitment to rewarding their investors with consistent and growing returns.
That's a significant jump. And what about the buybacks? How are they approaching that?
Hitachi has committed to 400 billion yen in share buybacks over their midterm management plan. However, they're executing these buybacks flexibly, taking into account market conditions and the progress of their growth investments.
So it sounds like a balanced approach, prioritizing both growth and returns.
Exactly. And to further demonstrate their commitment to shareholder value, they're also actively monitoring their total shareholder return, TSR performance, against the TOPIX index.
It's like they're saying, look, we're not just talking the talk, we're walking the walk when it comes to shareholder value creation.
Right. They're taking concrete steps to ensure their transformation benefits both the company and its investors.
So we've covered a lot of ground with Hitachi. We've explored their transformation from a hardware-focused conglomerate to a global leader in what they call the social innovation business.
We've delved into their three core business segments: DSS, GEM, and CI, each strategically aligned with major global trends like digitalization, sustainability, and the convergence of IT and OT.
And we've unpacked their impressive financial performance, highlighting their commitment to both growth and shareholder value. But what does this all mean for the future? Where does Hitachi go from here?
Yeah, it's fascinating to see how they've managed to completely reinvent themselves. While staying true to their core values of innovation and social responsibility, they've shown that a company doesn't have to choose between doing good and doing well. They can do both.
And they've done it by embracing those new technologies, investing in their people, really focusing on creating value for both their customers and their shareholders. It's a model for success that other companies could definitely learn from.
Absolutely. Hitachi has proven that with the right strategy, aligning with global trends, investing in research and development, and fostering a culture of collaboration. It's possible to achieve sustainable growth and make a positive impact on the world.
I think we've covered a lot of ground today. We've really explored Hitachi's incredible journey, from its roots as a hardware-focused company to its current position as a global leader in what they call the social innovation business.
We've delved into their three core business segments: DSS, GEM, and CI, each strategically aligned with those massive global trends we talked about: digitalization, sustainability, and the convergence of IT and OT.
And we've unpacked their impressive financial performance, highlighting their commitment to both growth and shareholder value. But what really stands out to you about Hitachi's story?
For me, it's their resilience and their ability to constantly adapt. They haven't been afraid to make tough decisions, like divesting non-core businesses, or to embrace new technologies like generative AI. Even when those technologies are still evolving, they're not just reacting to change, they're actively shaping the future.
That's a great point. And I think their focus on social innovation is also key. They're not just chasing profits. They're trying to solve real-world problems and make a positive impact on society. It's a business model that I think will become increasingly important in the years to come.
I agree. It's not just about being a successful company anymore. It's about being a responsible company, a company that contributes to a better world. And Hitachi is showing that it's possible to do both.
Well said. So for anyone listening who wants to understand how a large corporation can not only survive, but thrive in the 21st century, Hitachi's story is definitely worth studying. They've shown the transformation is possible, even for companies with long histories and complex structures.
It's been a fascinating deep dive into a company that's truly shaping the future. I'm excited to see what they do next.
Me too. Thanks for joining me on this journey. Until next time, keep diving deep.